travel. As part of that role, I kind of drive our growth agenda for new sales, existing accounts and partners. And what we're going to speak to you about today is how you can utilise partnerships as part of your go-to-market strategy in the UK. So partnerships is a really important part of our distribution strategy at Trustly. We're very much reliant on this one-to-many model. We use global distributing partners to kind of increase our reach across Europe and the US. The structure of today's session is we're going to kind of dive into 7 questions that you need to be asking yourselves and be able to answer when considering partnership opportunities in the UK. And then kind of a couple of tips from Trustly on how we manage those relationships to get the most out of those partnerships. It's all fairly straightforward stuff, I would say, and I'll try to bring in as much as I can kind of our own experiences and some of the lessons that we've learned. What I would just say, just before we dive in, is when I look at across our partnership portfolio at Trustly, whilst we have some really strong partnerships, there's also a number of partnerships that really haven't delivered what we were expecting them to. So whilst I think partnerships is a very important part of any go-to-market strategy in the UK, it's not a silver bullet, so don't be overly reliant upon them. And typically what we found is it really has taken some time to get our kind of ways of working embedded with our partners to really see that value long term. So just to dive into some of the kind of key questions you should be answering as you evaluate partnership opportunities in the UK. This first question on proof of concept or partnership, what we're really trying to get across here is the partner in a position to add value to your company from day one? Are their processes mature enough, and do they have kind of an existing merchant base where they can really push your product out to? Or are they really looking at this as more of a kind of feasibility assessment? Because if it is the former, it's likely that it's going to be quite a long delay before you get a real return on investment and time that you spend getting that contract live or getting that partner on board. And then the second point I just wanted to talk about here is, the question is the end user the driver? But what's really important is that when you go into trying to onboard new partners or you're having conversations with new partners, it's very clear that you understand what the value drivers are for everyone in that relationship. Why is the partner going to want to push your product? Is it a consumer benefit? Is it a merchant benefit? Or is there an operational benefit for the partner? It's really clear that you can articulate that to the partner very early on in the process, otherwise it's unlikely they're going to seriously consider you. This next one is very kind of straightforward for everyone in the room, but I just wanted to include it here. We look at onboarding partners at Trustly very much in the same way that we would look to onboard new merchants. So it's very important that we identify very early who the influencers in the organisation are, but also who is the decision maker. So you don't want to be wasting time in conversations with people that ultimately aren't going to dictate that decision. In terms of what are the economics? So when I look at this, it's really what is the benefit for the partner that you are delivering. When I look at these 3 questions, the answer to these questions typically dictates the success that we have had with our partners. So just looking at this purely from a payments perspective, first question, does this improve margin? We work with a number of global partnerships who've got kind of long-standing revenue streams in card acquiring. The issue that we've had with those partners is that they typically, even though they've onboarded us as part of their payments portfolio, is they've seen us as competitors to their main revenue streams. In those situations, we've typically had quite limited success when using those partners. And we've actually had to come up with quite creative ways to incentivize them to push Trustly when they may not typically do it. Second question around, does it reduce cost? Where we've had the most success working with partners is typically partners that are focused on alternative payment methods, where Trustly sits, and they have a very strong value message to their customer, which is we can reduce your cost with an innovative payment method. So when we've been able to reduce costs on behalf of the customer for a partner, that's typically where we've had our most success. And then the third one on does it increase stickiness? Again, just applying this to the industry that we work in. Increasingly today, partners want to own the whole relationship with a merchant. They want to own the whole checkout. So they will want to be responsible for processing card payments, but also processing bank payments, processing buy now, pay later. So their ability to offer kind of a full portfolio of payment methods is really this kind of sweet spot where Trustly's being able to, I would say, take advantage of. Now, when you're answering those questions, if there is a kind of strong economic argument, this is obviously a great place to start a partnership. Strong foundations which you can capitalize on. But if there isn't a very strong immediate economic benefit, and perhaps business case isn't as straightforward as you would want it to be. It's very important that you can move the needle in other ways. So we kind of put it here to be very easy to work with, but there's a couple of aspects to this which we're going to dive into on another slide. But that's ensuring that you have properly defined ways of working with the merchant. They understand your product as if they were part of your existing organisation, which I think is one of the most difficult challenges when working with partners, and they feel comfortable proactively selling your product. So in terms of the next set of questions that's important to answer is, and this is all dictate how easy it is for the partner to push out your product and to actively sell it. So kind of key question here is the product/service core to their proposition. So if you can answer the question of the product, if your partner is not confident selling your product, then you know that's clearly an area that you need to focus in. And more importantly, are you more or less complex than competitors and alternatives? Now, when I answer this question from a trusting perspective, I reckon one of our biggest downfalls that we've had over the last 3 to 4 years is that we have not got our partners into a position where they are really comfortable selling our product. And the main issue is because we do have quite a complex product. As a result of this, what we have increasingly tried to focus on, and our partnerships team, some of their key KPIs, it's all around education and engagement with partners. How many commercial training sessions can they do with them on a quarterly basis? How up to date is their information on our product? How up to date is the sales collateral that we've given them? And the need to just engage more and more with them. So again, if you kind of view your product as a more complex one, that perhaps is a little bit different to what your partners typically offer as part of their proposition, then it's really important that you are just trying to engage with them at all times. And again, this is a lesson that we have learned the hard way. We have merchants getting on board through some partners, and they are quoting pricing that was out of date 2 years ago. So this is something you just need to be kind of really on top of. So in summary, when you are starting to initiate conversations with partners in new markets, it's really important you've got a clear gauge on these 7 questions. What type of partnership is it? And are they able to add value to your organisation from day one? What is driving that conversation in terms of value? Is it the end user? Is it the merchant? Or is it the partner themselves? The economics, does it improve their margin? If it does, then it's likely that they're going to be more willing to promote your product. Does it reduce costs? Does it increase stickiness? And then the final aspects, kind of doubling down on how you work with the partner to really maximise distribution after they sign the contract. Are they confident selling their product? And are you more or less complex than competitors or other providers? So they're the key questions. Then just in terms of, I guess, some trusting lessons that we've had with the partners that we work with. Now obviously, signing a contract with a partner is a very important milestone, but it doesn't necessarily equate to success. Kind of go back to this point around wanting to avoid empty partnerships. It is my opinion, and I think shared by most of our kind of partnerships organisation, that what is absolutely key with partners to ensure kind of a long, sustainable relationship is bedding in the right ways of working after you put your contract signed, and making sure that you are close partners as opposed to, just making sure that you've embedded your 2 organisations. So 4 areas that we kind of top tips that we wanted to say, mention here. First aspect is kind of focusing on the tangibles. We've just recently gone through a whole exercise of simplifying our pricing for our partners. Feedback that we had from them was that there was too much complexity in the models. It's hard for their commercial teams to understand and then sell. So we've simplified it on a market basis and we've simplified it on a vertical basis. In terms of key dates, obviously if you're onboarding new partners, when are they going to be ready to actively distribute your product? What are the key dates for any product improvements? And what kind of milestones are you working towards? What I think is the most important point here, and I kind of continue to reiterate it, is embedding proper ways of working with your partners. The way we approach it at Trusty is very similar to how we approach it with our largest merchants. We have kind of more formal QBRs in place, with the kind of key influencers from the partner side, but we've also got monthly calls with our product contacts and also our marketing contacts. We also run kind of internal monthly calls with the different commercial teams, focusing on the different initiatives that are getting driven with that partner. In terms of kind of including the giveaways, this is really just making your offer as attractive as possible to the partner. Kind of go back to that question around does it improve margin for the partner? If you're in a situation where your offering does not improve their margin, then you need to come up with other creative ways that you can potentially incentivize them to distribute. For example, one way that we have done this is that, again, with partners that typically their main model is reliant on hard acquiring, and where we may not be able to deliver the same margin to their commercial teams, is that we kind of create bespoke incentives, where we have agreed target merchant lists with our partners, and then certain rewards associated to those merchants. If, for example, it's a vertical that we don't have a big presence in, and that we want to go after in a more significant way, then the incentives tied to those types of merchants will be larger. And then finally, don't use up your goodwill. Remember that, typically, I think get a real return on investment when you're using distribution partners is you need to be onboarding a number of merchants every year for about a 5-year period. So you just got to remember that whilst obviously I kind of reiterate the contract is an important milestone, that's really just the beginning of the relationship. So just wanted to touch on some ways that we do this at Trustly, kind of the ways of working that we have adopted. Really it's just around embedding kind of quite stringent governance structures. I kind of equate this really to almost internal project management is the kind of process that we've tried to follow with our partners. So it's very important that you do obviously have kind of regular checking with your partners, but it's important that you're also speaking to the right people, so defining when you're going to speak to them and who it is. And what we try to do, and what has been successful over the last year or so, is really kind of trying to emphasise the importance of joint initiatives between both Trustly and the partner, and trying to kind of drive those joint accountabilities. It is these initiatives that we then kind of review progress against on a quarterly basis and also on a monthly basis. So just in kind of top tips, and I know a lot of this is kind of pretty clear and straightforward, but in terms of meeting dates, the way that we've typically done it is in the QBR of the year, you'll arrange dates for the next subsequent year. It's the same for both merchants and partners. And we really do kind of promote this idea of having a shared initiatives document where both ourselves and our partners are frequently updating and referring to. And kind of final point here, it is important obviously to be engaging with the right stakeholders from your partner. So definitely including your sponsors and also the doers from that side. This is fairly high level, but this is kind of very simple project management tracker that we use internally at Trustly, and that we kind of promote with our partners. So again, very, very basic, but it has promoted engagement between ourselves and our partners, and led to increased activity. So final slide, just finished, just in terms of when you're considering partnerships as part of your kind of approach into the UK, really important you understand what type of partnership this is and what they're hoping to get out of it. I wouldn't over-focus on the contract. We've had instances, and other players in our space had instances where you may have a partnership because they want a positive news story and some association with your product, but it never actually delivers any long-term value. And then the final thing is just really doubling down on governance. Again, I know it's a very simple message, but it's the simple things that we've found to be quite effective within our organisation. I think I've finished quite quickly, but if there are any questions, happy to take them now or afterwards.
Thank you, Alexander. Any other questions?
Actually, I have.
Yeah.
How do you ensure, how do you cement sort of a common understanding in the partnership model? On what level, or how early do you cement it? Do you do it before you actually sign the contract? Do you have sort of a business plan for next year or whatever? How do you actually work on this to make sure that your partner understand that what happens after you sign the contract?
Yeah, so I think it's a really good question. So we would articulate kind of what we think is best ways of working as part of that contracting process, and we would try to get certain commitments in place as well. But typically the training aspect, that's very much after the contract has been signed and the partnership is live. what we've tried to do is get commitments from their side so that we can do at least a quarterly training with their different vertical distribution teams. When we kind of sell our trusted product, the messages do differ a lot between e-commerce, for example, travel, and gaming. So we do try to get kind of vertical focus sessions in the diaries. But to answer your question, there's much commitment from the partner at the point of signing the contract, but that educational drive is done afterwards.
How much do you typically, give the partners of owning the sales process, and do you trust you kind of ever jump into the sales process?
Yeah, so when we've had the most success is typically when we have created interest directly with the merchants themselves and then brought them to the partner. What we have found is having, I would say this is kind of where the empty partnership comes, but expecting the partner to drive all of your new sales activity is probably unrealistic. So especially at the early stages of the partnership, we brought the leads in, and then we very much use our partners as a way of accelerating the onboarding process. What we have found over time is as we've developed closer relationships with their relationship managers, that it's led to quite a lot of upselling opportunities. So I would say over time we've got to the point where they are potentially bringing in leads as well. In terms of the sales process, we would own most of the key sales pitches, and depending on the partner setup, they would dictate the pricing. That's how we structure it.
How do you manage? You mentioned empty partners, and you never get any guarantee that a partner is going to perform. So at which level, from a governance perspective, do you handle empty partners? When do you cut them loose, or how do you sort of make it perform, or sort of how do you handle that?
Yeah, it's a good question. So we follow a similar approach for both existing accounts and partners in terms of account tiering. But typically kind of fit into 4 quadrants. One is our kind of focus partners, maybe because of their revenue that they're already contributing, or because of the growth that we're expecting. And then we've got kind of underperforming growth opportunities, and then this low touch partner, which is kind of the underperforming partner. Kind of, we make 2 decisions. One is we haven't, because once they've done the integration, they've done the hard work, so we would never kind of turn that off, because it also kind of supports our value message when we go out to merchants that even if we don't use them, we have this brilliant partner network, so we've got different ways of kind of bringing them online. But we are quite strict in terms of our tiering and how much time that will take up from our partner managers. So for example, if there is a partner which isn't delivering any revenue, we probably wouldn't engage with them. We're definitely not on a kind of monthly or weekly basis. But if, for example, we have an opportunity that comes in which they have a connection with that partner, we would then look to kind of increase communication.
Yeah, also a question around the governance. I saw that you have pretty much like customer success dashboards and those kind of things.
Yeah.
How transparent are you with those KPIs in your QBRs towards your partners?
So those are actually shared documents, so they would be live for both ourselves and our partners so that they could edit them, contribute to them. We would obviously have internal views on the partner, we can share all of that information, but we try to be as transparent as possible.
Are there any obligations on the partner that they have to contribute with a certain revenue, for example? Or is it completely best effort, or how do you?
It depends on the contract that is agreed. We are currently onboarding a new partner where pricing is dictated by how many introductions they give us to merchants. So it is possible to do that. What I would say in our space is for the largest partners, it's typically much harder to get those kind of performance criteria into the contracts. But where possible, we do try.
You mentioned something about partnerships with competitors. Could you sort of elaborate a bit about that point? And is there an example of a partnership between 2 competitors that you can highlight that might emphasize the potential of partnering with competitors?
Yeah, sorry. So I think I may have. What I meant to say was in the context of the partner distributing your product, how much do they know your product compared to your competitors, or how complex is your product to your competitors? So we don't actually have any instances where we have partnered per se with our competitors.
Okay, thank you so much. Thank you.